And the news from India, where the biggest news is that, as expected, Monetary Policy Committee of Reserve Bank of India today hiked repo rate by 25 basis points or to 6.50% in its third bi-monthly monetary policy review. The repo rate, which is repurchase rate, is the rate at which RBI lends money to commercial banks in event of any shortfall of funds. This means that woes of home loan borrowers will continue. RBI had increased rate by 25 basis points in the previous policy review after a gap of 4.5 years. A hike in repo rate will have a direct impact on borrowers as banks are likely to increase interest rates on loans in tandem. This is because a hike in repo rate will mean that banks' marginal cost-based lending rate in all likelihood will go up. Now, since the start of the year, many banks have been increasing their MCLR. RBI move means it is a back-to-back interest rate increase. In its June policy meet, RBI's sitting panel, headed by Governor Urjit Patel, raised repo rate by 25 basis points to 6.25%. Back then, it was the first rate increase since PM Modi came to power in May 2014. This is first time since October 2013 that rate has been increased at consecutive policy meetings. MPC kept its policy stance neutral at today's meet as well. Reverse repo, the rate at which Reserve Bank borrows money from commercial banks within the country, was adjusted to 6.25%. Now, even as inflation projections for second quarter have been revised marginally downwards vis-a-vis June statement. Now, projections for the third quarter onwards remain broadly unchanged.
In addition, rising trade protectionism, geopolitical tensions, and elevated oil prices pose grave risks to the near-term and long-term global growth prospects by adversely impacting investment, disrupting global supply chains, and hampering productivity. Against this backdrop, the committee decided to increase the policy rate by 25 basis points while maintaining the neutral stance of monetary policy. The committee reiterated its commitment to achieving the medium-term target for headline inflation of 4% on a durable basis while supporting growth. GDP growth is projected at 7.4% for this fiscal year, as in the June statement. 7.5 to 7.6% in the first half of 2018-19 and 7.4% in the second half, with risks evenly balanced. The projection of GDP growth for the first quarter of 2019 is placed at 7.5%.
And we're joined by correspondent Pragya Jha for more on this story from Mumbai. Pragya, very good evening to you. First of all, definitely down there is a bad news for home borrowers, home loan borrowers, and they would see the rate hike coming and hitting their pocket. Is that right?
That's right, Sumit. In fact, the RBI has finally bitten the bullet, and as expected by many economists around the country, it was expected that there would be a rise in the rate this time around, the repo rate, that is, which has seen a rise of 0.25 basis point, as well as we've seen that the reverse repo rate stood adjusted at 6.25%. But we must remember that for the common man like you and me, home loans will, of course, get costlier. They'll get marginally costlier, and other than that, we must also, observe that there were 6 out of the 5 members on the rate panel who voted for an increase in rate. Of course, this repo rate increase has been attributed to rising, rising crude oil prices and international markets also behaving in a volatile manner. And other than that, the actualization of the minimum support price and, the lack of confidence that has been generated. So these are the various aspects and can be attributed as factors for this time's, back-to-back or consecutive rise in the rate of the monetary policy by the Reserve Bank of India.
And Pragya, what has been the overall, we can say, that commentary of Reserve Bank of India as far as this time it's concerned, because inflation rate, it's projected to go up further?
That's right. As projections come about that inflation rate is, all set to get further, but they're still hoping that there could be some tightening on the news there, whereas other economists are in fact saying that although there was an increase in the repo rate this time around by 25 basis points, yet the RBI chose to keep the stance as neutral. So there have been economists who have been saying, in fact, it could have been a stance of tightening rather than staying neutral, because there has been a consecutive rise here in the prices. But that's what the RBI says, that we're still trying to maintain, also the GDP between 7.5 to 7.9, and it's come to 7.4% this time around. So we'll have to wait and watch before the before the October policy review of the RBI as to whether there would be an increase, because this time around people are expecting that it would not be this monetary policy committee meet, but it would be rather in October, where there could be a rise in the in the repo rate this time around. But we've seen that this has been the second ever since June.
And before I let you go, Pragya, I would like to ask you overall, RBI governor also said that the government should brace for currency war, and overall currency wars are here to stay. Any likelihood of something else, or what can we infer from that?
That's right. We've seen the statement coming around from Urjit Patel, the RBI governor, here today while he was addressing the media. And in fact, this goes on to alert the economists and the money circles here. Also, we must remember that he did mention that the rupee was falling. In fact, was declining ahead of in front of the dollar that we see. But this could have been one of the reasons, as we've seen that the depreciating rate of the rupee every time. And so hence the statement was also taken into consideration.
Well, thank you so much, Pragya, for joining us and getting us all these important details and important perspective on this important developing story.